Hello, ladies and gentlemen. This is your teacher Usman Ali, and we gonna discuss the solution of the exercise 413 of the irregular items related to income statement and a retained earnings statement. Okay, the exercise is related to one of the irregular item, which is change in accounting principle. That if you change an accounting principle or method, so how you gonna adjust that? Okay, remember that such adjustments are made in the retained earnings statement, which we have already learned in other videos. So here we are not going to do the adjustment. Here we will calculate the amount, that how much adjustment is needed actually. Okay, so Tim company had started its operation in 2005, and for simplicity reason they were using weighted average pricing method for the inventory. So in the cost flow assumptions related to inventory, we use average costing, FIFO, or LIFO methods, any method which is good with us. So we actually select that. So the company, when they started their business in 2005, they decided that we're going to use average costing method. Now in 2007, in accordance with the other companies in the industry, the company changed its inventory price to FIFO. So in 2007, which is after 2 years of doing business, like 2005 they started, so it's like 2005 they did business, and in 2006 they also did business, and they used average costings method in these 2 years. And then in 2007 they realized that my competitors in the industry are not using average costing method, so I must shift to FIFO method. Now this is a change in accounting principle scenario. And if you remember from our chapter PowerPoint discussion, we said that whenever you have a change in accounting principle, so you must adjust retrospectively, which means if you are standing here in 2007, so you have to go back to that point since you started using the old method. So as we started using average costing method in 2005, and I'm right now standing here, so I have to go back 2 years and adjust the income of the company for these 2 years actually. So that's what we're gonna do here actually. Okay, so let's go further and let's see what do we have in the question. So we got the incomes available. These are actually the non-tax deducted incomes for the year 2005. Using the average costing method, we had a taxable income of $3,70,000. Then in 2006 we had a taxable income of $3,90,000, and in 2007, according to the weighted average method, our income is $4,10,000. Now these are taxable income, tax must be subtracted from this. But if I use FIFO, then my incomes would be this much. It's like right now I'm standing here. So I'm standing in 2007, but as I have to adjust for 2005 and 6 also, because I'm changing the method. So I had to assume that what if I was using FIFO method in 2005, so how much would I have earned? So I would have earned $3,95,000 instead of $3,70,000. So actually I recorded $370,000, but now that I have changed the method, so according to the new method, this earning should be $3,95,000 and like $4,30,000 and $4,50,000 here. Okay, so part A is what is the company's net income for 2007 if the tax rate is 35%. $4,50,000 is the earning before tax. Okay, so to answer part A, simply what I've done, I have made some basic formats to save a bit of your time and MBs. Okay, so this is the format of part A. In part A, we were required to calculate that what is the net income of 2007. So first we will write the earning before tax of 2007. So this is the earning before tax of 2007, $4,50,000 according to the new method. So I will write it here, $4,50,000. Then what I will do is I will multiply 35% with this $4,50,000. So I get a tax expense of $1,57,500. You know this format, so I'm not explaining that. I've taken it from the income statement format actually. So you subtract it from the earning before tax, and you get your net income of $2,92,500. So that's the answer of part A. where you were supposed to calculate the net income for the year 2007. Then in part B, you have to calculate the cumulative effect because of changing the method. Like if you have changed the method from average costing to FIFO costing, so just because of this change, how much income of the company has gone high or low, that we have to calculate. Now earlier in the question I told you that we will do adjustment for the last 2 years. Right now I'm standing in 2007, so in 2007 no adjustment is needed, okay, because we have not closed it yet. Adjustments will only be needed for the prior periods, which is 2006 and 2005. So let's do the adjustment of 2005 and 6. Now according to the numerical in 2005, and if we used average costing method, then our income was $3,70,000, and in 2006 the income was $3,90,000. So I will write it here, $3,70,000 and $3,90,000. Okay, this is according to the old method. According to the new method, my income is $395,000 and $430,000. So I will write it here, $3,95,000 and $4,30,000. So if I try to calculate what is the difference between them, so the difference of these two is $25,000, and the difference of this two is $40,000. What does it mean? It means that I recorded the income of the company $25,000 less, low, because of using average method. Why? Because income here is low as compared to this one. So previously, like, I recorded less income. Again, if you see here, I recorded less income. The total income that I have recorded less, if I plus these two, would become $65,000. It means that the cumulative effect is $65,000. But this is a taxable effect. We have not subtracted any tax here, because if I'm earning money, so obviously I need to pay tax also. Tax percentage, if you remember, is 35%. So 35% will be multiplied with $65,000. We get a figure of $22,750 as tax expense. We're gonna pay this tax. So that's 65 minus this is $42,250, which means that I will do the adjustment in the retained earning of the statement by this value. First I will write this value in the retained earning, then I will minus the tax adjustment, and then the remainder. Okay, so it's exactly the same thing which we have been doing in our basic numericals that we have learned. The only thing is here we have not did the adjustment, we just calculated the amount of adjustment here. Okay, so this is how you calculate the cumulative effect. Now if the company was operating for last 5 years, then I have to do the calculation here for 5 years, for 10 years, according to the needs. Okay, then let's go to the third part. That part shows show the comparative income statement for all the 3 years actually. Okay, a comparative income statement means it's not a full income statement, and a comparative income statement means a comparison year by year actually, and it's about partial income statement. So earning before tax of the year 2007, we have earning before tax of the year 2007, this is 4,50,000. I will write it here. Then the earning before tax, okay, according to the new method for the year 2006 is given here, or let me take it from the numerical, that will help you. So according to the FIFO method, okay, I'm gonna calculate the comparative income statement. Okay, so according to the FIFO method in 2007 we had an income of 4,50,000. I wrote it here. Then according to the FIFO method in 2006 we had an income of 4,30,000. I will write it here, 4,30,000. And according to the income statement we had an income according to the new method of 3,95,000. I will write here 3,95,000. Okay, and then the tax percentage is 35%. So I'm gonna multiply 35%, 35%, 35% with all of them. If I multiply with the first one, it will give me 1,57,500 tax. If I multiply it with 4,30,000, it gives me 1,50,500 tax. If I multiply it with 3,95,000, it's gonna give me 1,38,250. Okay, and that's it. I can subtract this. The remainder would be 9,92,500, which we call net income actually. When I subtract this one, we get an income of 2,79,500, and we get a remainder of 2,56,750 here. So the main crux or the main point was actually the part B, where we were supposed to calculate the cumulative effect, and this is how you do that in your real life actually. You do the comparison, old method minus the new method, and then you calculate the difference. The difference will tell you that it's a decrease in income or increase in income. So it's like this, that if I have changed the method from old to new method, my income has gone high because of 370 and 395. So 395 here means it's going high. If it's going high, it means I must do the adjustment of increasing the income, so it will be plus in the adjustment. Likewise 390 and 430, so again my income is going high, so overall I will plus the increase, but after the adjustment of the tax, which is this, I'm gonna plus this thing, okay? And the remaining part A and part B are just calculations. They are not like the cumulative, they are not used for the cumulative effect actually. So in part A, we just calculated according to the new method how much income the company can earn. In part B, the cumulative effect, that how much amount of adjustments will be needed. And part C, it was just to see that how much profits would have been earned if FIFO method is used. Okay, remember this, we did this calculation for the new method. These are all new method figures from the numerical. Thank you very much, ladies and gentlemen. Stay safe.